Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey guys, welcome back to our show. I'm your host, John Harkar, and I'm here today with Gary Sund. And what we're going to be talking about, besides his incredible journey that he shared with me before we got on here, but talk about using life insurance to pay debts. Guys, remember, at Investor Fuel, we help real estate investors, service providers, really all real estate entrepreneurs 2 to 5x their business. And we do that by providing tools and resources to help them grow that business they want to grow, which in turn helps them live the life that they want to live. So, Gary, welcome to our show.
Hey, thanks.
Yeah, I appreciate you coming on here, and I'm excited to learn about your what sounds like a wealth of knowledge and experience, and then talk about the topic of life insurance to pay debts. But before we go into all that, do me a favor and just tell our audience a little bit about you, kind of where you're from, your background, how you got into real estate, and what got you here.
Yeah. 84, I started collecting rents for a guy next town over. Got my notary, and then enjoyed it a lot until somebody put a shotgun in my face. So that was the end of my rent collecting career.
Okay.
I became a salesperson for a franchise, one of the local, Century 21.
Okay.
And then worked there for a while. Then when I got my broker license 3 years later, I started my own, and I got involved with a foreclosure project, 100 units.
Well.
And half of them were done and sold. The other half were a friend of mine got to finish the project. The project fell apart and took a bank down with it.
Okay.
So I worked with him, and then I got in the mortgage business, originating Fannie Mae first mortgages. And I did that for a while with a local bank in Boston. Then I found a lender that would take me in, and then I made it to Wells Fargo, and then Washington Mutual, and then Countrywide. When it all hit the fan, I was the loan originator at Countrywide back in 2008. And then from there, I started this notary business. I've been a mobile signing agent. I'm an independent contractor in Massachusetts. 26 states, including Massachusetts, require notarization of wet ink signatures for documents. If the property is located outside the state of Massachusetts, the title company can hire a notary instead of hiring an attorney, so it saves the customers money.
Sure.
So I get certified and approved and bonded and insured and all that. So I'm a B2B guy. My biggest customer is First American Title. They do 60% of my business. I get calls from their agencies all over the country when they need somebody in Massachusetts.
Okay.
So that's what I do. And then I noticed what was going on, which was a lot of financial distress out there. I'm doing a lot of what's called loan modifications.
Yep.
Yeah.
Okay.
And so I decided, as hell of it, I'm getting back in the mortgage business. So I just got my mortgage broker license 2 months ago for Massachusetts only to originate and I'm working with UWM on the wholesale side, and I'm working with.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Finance of America on the reverse side.
Okay.
Yeah. And so I still operate my real estate brokerage business. So the whole strategy is coming together finally. But what it amounts to is, if you're getting married and you're going to get a gift from your parents, you're better off getting the parents to lend you the money in a second mortgage than outright gifting you the money.
Mm.
Because they can lend you the money at an interest-only rate for as long as they want, based on the applicable federal rate. That's a 4.5% 30-year mortgage today.
Mm-hmm.
It would be a loan from the parents to the children. But the beauty is, if the money's coming from the groom's parents, instead of gifting the money to the deal, and as sure as night follows day, if there was a divorce, the wife would get all the equity that they put into the deal in the form of a gift.
Right.
If you do it in the form of a second mortgage, the house is 100% encumbered.
Mm.
So it's advantageous from a liability standpoint for the groom's parents to do it on the second mortgage. But the way you finish it off is, parents give you the money on a second mortgage. Every payment you make to them on that second mortgage, they then gift back to you to purchase a term life policy, a convertible term life policy for at least the amount of the mortgage. But it's gifted money from the parents, so $1 doing the work for $2.
Mm.
They're giving you the money, you're giving it back to them, and then they're gifting it to you to pay the premiums on a life insurance policy.
Okay.
So now you've got your foundation, you've got your equity, and you've got your debt secured. You don't have to do anything else except pay the mortgage.
Now, what happens if someone doesn't have people that gift them? They don't have family members that gift stuff. How can life insurance help pay off debts?
Well, a life insurance policy, you should be on the one who's financially obligated to make the payments on the mortgage.
Right.
If it's the husband or the wife, it don't matter.
Okay.
But that's the person upon whom there should be placed a term policy, at least for the minimum amount of the mortgage.
Right.
So you can get up to $1 million today without an exam. Anybody can qualify for $1 million policy.
Mm-hmm.
The best thing to do is if you can get 20 times last year's gross. If you made $100,000 last year and you get 20 times that, if you can get a $2 million policy, by all metrics, all standards, you're doing the right thing. That's a good thing. If you can get 30, all the better. And then you convert that to whole life along the way.
Yeah, I've heard a lot of people using whole life and the whole infinite banking type of model. How does this differ? How is this better? What are the pros and cons?
Well, insurance, in this particular instance, you can design a policy to maximize the cash value as fast as you can. However, by allocating the dollars to that strategy, you give up the opportunity to maximize the death benefit early on. So instead of a $2 million death benefit, if you design it for the IBC, you might get a million, $1.2 million or something.
Why?
Well, because it's paying the premium plus, which goes into the cash value. And term is just premium.
Right.
But for the period of time, for the first 4, 5, 6, 7, 8 years, you don't want to lose the opportunity to be able to maximize the death benefit. And the only way to do that was with a big term policy. So next year you convert a little bit of it to whole life, and the next year you convertible. Every year on the anniversary of the policy, you can convert little segments to whole life. That's what you want to do as your cash flow permits.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Okay.
Yeah.
And then what if someone doesn't have like a lot of cash flow to keep putting in? What if they're kind of scraping by the day?
Well, if it's a situation where they're taking on debt, they just need the amount to pay off the debt. Don't get extravagant.
Right.
But you should never take on naked debt if you don't have to. And you never, that would presuppose you had other equity and other assets prior to taking on more debt. But typically, if you're just a rookie starting out, you borrow as little as you can to get into a real estate deal.
Yep.
And you buy as much term policy as you can afford monthly and convert it as you go. But otherwise, you've done your job. You got a house, you got a mortgage, and now you got a mechanism to be able to pay it off, because you don't want to be irresponsible to your family.
Mm-hmm.
So it's a timing of, not every tool should be utilized today or implemented today or put into service today.
Right.
But life insurance, mortgage, house, you got to have that. Now you got everything you need. You can go out and buy another piece of real estate if you want, and they got that debt covered by the life insurance policy. But the gifting of the premium back to your parents are going to repay that second mortgage to you, and they're going to turn around and gift you that money, and you're going to take that money and and pay the premiums on the insurance policy, and then you don't have to do nothing else from there. Just ride off into the sunset. I wouldn't even recommend refinancing the mortgage. Just everything is
Why not? Why not refinance the mortgage?
Well, if you can lower the constant, shorten the term, always.
Right.
The holding period fits into some lifespan to a mortgage. The average mortgage is paid off in 8 or 9 years. So most people take a 30-year note, but they're only using 8 or 9 years.
Mm-hmm.
So they're overpaying for those other 11
years. Yeah.
29 years. So that is a sin. That's a cardinal sin. So the way to get around that is to take get a 30-year term and then get a 10-1 interest only. All you have to repay is the interest only for the first 10 years. And you're not coming out of pocket with as much money as you would have had to come out of pocket if you were amortizing the loan.
Right. That makes sense.
It's about a 13% difference in out-of-pocket costs for the debt service between an interest only and a amortizing.
Okay.
So it's something that should be implemented every chance you get, especially if you're using the strategy within the familiar lending. To get back to your question, if you don't have any father, mother, sister, brother, grandparent, son, daughter, the loan doesn't qualify as an intrafamily loan.
Right.
But if you can get the same way to do it would be like to go to your local municipality and ask them if they have any grant programs for down payments. The same amount of money coming into the deal, whether it's a third-party source or down payment from some grant program, anything you can do to cut down your exposure. If it's $100,000 house and you can come up with a $3,000 grant, now all of a sudden you're only obligated for 97 of it.
Yeah, right.
Yeah.
Do you think there's a lack of education out there for this for, the general Joe?
Well, yeah, I know what I put in for time.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
I put in huge amounts of time in research and licensing and experience. It's my whole life. I can't imagine anyone else going through what I go through. That's what propels me more, is I know that I know more than most because I'm spending more time than most. And it plays right into my strong suit, which is I'm a mortgage broker, I'm a real estate broker, and I'm a life insurance broker.
Okay.
So if you want a comprehensive design for your future real estate holdings, I've designed it already, and it's just getting off the ground now.
Is all your business, or are you licensed only in the Massachusetts market?
Just Massachusetts, but it works. Well, are you familiar? In the United States, there are judicial foreclosure states and the deed of trust states.
Right.
Judicial foreclosure states, there's 26 of them.
Mm-hmm.
And so I know they work in those states.
Okay.
I'm not sure about deed of trust states, but I'm only licensed to practice in Massachusetts. But everything I do, in theory, is good throughout the country.
Okay. All right. Well, cool.
The foreclosure rules are different. And yeah.
Okay. Well, I mean, it sounds like this is something, that a lot of our, listeners might, be interested in wanting to hear, maybe talk more about. How would someone get a hold of you if they wanted to kind of reach out and talk to you a little bit more about this whole subject?
1-800-GARY-SUND.
You got that number, huh?
Yeah, I did. And I got the website, 1-800-GARY-SUND.com.
Wow. Okay.
That's the name of my mortgage company. I've been working on this for quite a while.
To say, I mean, you had to probably get that a while back. Well,
yeah.
I appreciate you coming on here. And is there any last information you'd like to share with our audience? Something that they need to know?
Anyone can reach out to me on LinkedIn. I'm on Facebook every day. I use Messenger. I have a YouTube channel that I'm just getting started. All my social media is just getting started. At 1-800-GARY-SUND. I'm on X and YouTube and Instagram and Pinterest, and it's just blossoming out for me. It's all just coming. It's just me. And,
Got it.
A kid that's helping me out with the computer stuff. But the website ain't up yet, but probably in a month it'll be up.
Okay. Well, awesome. And Gary, we'll put all that stuff in our show notes so everybody can, if they want to get in touch, they can. I appreciate you again coming on. Guys, reach out to Gary if you have any questions. Sounds like a very interesting way to, better use your money and insurance policies at the same time. So, Gary, thank you again.
Okay.
Folks, I hope you enjoyed it, and we'll see you on the next one. Cheers.
All right, later.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.